Here's how to go from $0 a month to $10,000 a month by using prop firms. Now, first of all, the best part about using prop firms is that there's no huge startup capital needed. You don't need $100,000 from your own money, or 50K or 25K or even $10,000 from your own money. No, you can actually trade with $100,000, $200,000, $500,000 worth of accounts for only a few $100s. But that's obviously only if you know how to and you know how the game actually works. Because yes, I call it a game, and prop firms is a game because that's what it is, okay? It's an ROI game, return of investment, because your expenses are your challenge fees and your profits are your payouts. So your job is obviously to make your profits outweigh your losses. And if you do it correctly, you can easily make 10, 15, 20, $25,000 a month. But you have to know how, and you have to know how the game works, what you need to do, and everything in between. So that is what I'm going to be going over inside this video. So I hope you stick until the end, because there's a lot of valuable advice in this. And basically take some notes, watch until the end, and let's get into it. Now, if you don't know what prop firms are already, I'll explain this in 15 seconds, very short here. Now, prop firms allow you to prove yourself and allow you to prove the firm that you can actually trade profitably. And if you prove them that you can actually trade, you can then get access to larger capital to trade with. Now, the capital they provide for you is simulated. However, you get paid out real money when requesting a payout. So to sum it up, right, if you can trade profitably, you can buy a 100K to 200K to 500K challenge for a few $100s, pass it, and make very good amounts of money. Now, obviously, if you can't trade, you lose the initial few $100 fee and the challenge fee. Now, in terms of the ROI game, the return of investment game, well, your expenses or your evaluation fees. So for Forex evals, this is $100 to $300 per challenge. And for futures prop firms, it's only $50 to $200 per month. And now in terms of profits and payouts, well, let's go over an example here. So you pass a $100,000 eval for $200, right? And then one good month, you could make $3,000 on that account. Let's say it's a $100,000 account, right? So you put in and you paid $200 for a $100,000 account, and you got $3,000 out. That equals to an ROI of 15x. So you essentially put a few $100s in for challenge fees and you get a few $1,000s out. So that is an ROI that's actually positive. And now you can actually scale. So let's go over the step-by-step guide to 10, 15, 20, $25,000 a month with prop firms. Now, first of all, this works for both futures firms and Forex firms. And the first thing you have to do is to buy a $100,000 evaluation account. Now, if you're on a Forex firm, you pay $200 to $300 for the account, one-time fee. And if you're on futures firms, you pay $50 to $100 monthly. Now, step number 2 is you pass that 100K evaluation. So the typical profit targets for Forex is 10%. For futures, it's 6%. And for Forex firms, it's also a 2-phase challenge. And for futures, it's only a 1-phase challenge. Now, step number 3 is to secure your first payout. So you don't aim for 10%, 20%, or whatever. No, you aim for a realistic target for 2 to 3%, which equals to $2,000, $3,000. So now let's say you put in $200 for a Forex or a futures eval, okay? Now, with that eval, you pass the account and you actually got a $2,000 payout. So $200 in, $2,000 payout. Now, with that payout, you then reinvest into more challenges. So the first challenge you had was only a 100K account, but now with your profits, you reinvest into 3 to 4 to 5 more accounts of 100K. So all of a sudden, you're not only trading $100,000 worth of accounts, you're actually trading 5 $100,000, aka $500,000 worth of accounts, and you can actually trade copy. So you can take a trade on one account and it's going to automatically copy on all of your accounts. And then it's literally a infinite loop where you make money, you get funded, secure payouts on all accounts, and then reinvest into more challenges. Now, let's actually break it down even more and go from A to C. So step number 0 is actually Forex firms versus futures firms, some things you have to know. Now, some pros and cons for both is that Forex prop firms is a 2-step challenge. It is more expensive, it's harder to pass, but it's easier to get payouts. Now, futures firms, however, has cheaper evaluation fees. It's easier to pass, but harder to get payouts. So to sum this up and not make it very confusing, well, if you trade currency pairs or CFDs, just use Forex firms, okay? If you trade futures already, use futures firms. There's not a big difference because on Forex, yes, it's a 2-step challenge, but on futures firms, you need to build a buffer. So it's essentially the same thing. And if you break down every single rule within Forex firms or futures firms, it's not really that big of a difference. So just use whatever you like. If you trade currency pairs or CFDs, use Forex firms. If you trade futures, use futures firms. Now, step number one is to pass the evaluation phases if you're trading Forex firms, or phase if you're trading futures firms. Now, in terms of passing the Forex evaluation, aka the two-step challenge, well, you pay $100 to $200 to $300 for a $100,000 account, and your profit target in the phase one is typically 10%, and in the phase two, it's 5%. Now, your maximum loss limit is 10%, right? And your daily loss limit is 5%. Now, on most Forex firms, your payout profit splits varies from 80 to 90, sometimes 95%, depending on the firm. And you essentially, in order to pass, you need to make 1.5 times the amount you can actually risk. So in order to pass, you need to make 15% in total, but you can only lose 5% a day and 10% maximum. Now, in terms of passing futures eval, so this is a one-step challenge, you essentially pay $50 to $79 to $100 per challenge per month. So it's a monthly subscription now, not a one-time fee. And now keep in mind with futures firms, there's only a one-step challenge. So your profit target is 6% and your maximum loss limit is 3%. And your payout in futures firms varies from 90 to 95 to 100%. Now, in order to go over risk management during evaluations, well, first of all, Forex prop firms, two-step challenge, right? I would suggest, and the way I pass challenges, is risk 2 to 3% per trade and then only take 1 to 2 trades a day. Now, you also need to aim for 1 to 1 or 1 to 2. You don't need to aim for 1 to 5 or 1 to 10 or get these sniper entries. No, just keep it simple with a high win rate and low RR. So aim for 1 to 1, 1 to 2, but get your win rate up to over 80%. And now with that strategy, I'll go over this in a few minutes here. You can use mine. It's got an 85% win rate. You can literally just copy it, but we'll get into that. And now with this risk management on Forex firms, you essentially need to take 3 to 4 trades to pass phase one, and then 1 to 2 trades to pass phase two. Now on futures firms, however, you need to risk a little bit less here. So risk 1 to 2% per trade, again, 1 to 2 trades a day, and aim for a low RR, actually what makes sense in order to get out logically. We'll go over this later on with the strategy, and aim for a high win rate, plus 80%. Now again, for futures firms, you need to take 3 to 4 trades to pass phase one, and then you're funded. Now, step number 2 is to secure your first payout with prop firms. So as I said, it is an ROI game. It is a return of investment. And in order to secure your first payout, well, you actually have to trade exactly, funny enough, exactly like you did during the eval or the evaluation phases. So don't try and switch anything up. It's clearly working because you passed the first initial phases. So don't fix anything that isn't broken. Now, obviously, in order to trade profitably, you have to not get greedy, not FOMO in, not overtrade, not revenge trade, and not just do stupid stuff in general, you know? So don't get greedy and realize that day trading doesn't mean you should trade every single day. It means that you should trade whenever your A+ setup occurs. And now, when securing your first payout, aim for a realistic payout of plus 2%, 3%, 4%, all the way up to 5%. Don't get greedy. Don't aim for 10% or 20% because you'll most likely blow the account and then you haven't secured your return yet. It's an ROI game, remember? You have to secure your return before you can actually start reinvesting into more challenges. So secure your first payout of $2,000 to $3,000 and then reinvest into more challenges. And now with futures firms, it's essentially the same thing. Don't get greedy. Realize that every single day isn't a trading day and aim for a realistic target for your first payout. Now, step number 3 is to scale by trade copying. So here's how to stack multiple trading accounts with not only Forex firms, but also futures firms. So if you've got a $100,000 account here, you can actually put multiple $100,000 accounts on top of each other. And when you take a trade on one of these accounts, you actually trade copied on all of them. So this allows you to not receive a $3,000 payout, but actually get $3,000 payout on every single account you copy to. Now, in terms of stacking multiple accounts and actually scaling that way, well, you reinvest your payouts into more challenges like we went over earlier. Because if you can make 2 to 3% on a $100,000 account, you can also make 2 to 3% on $1 million prop firm funding, and 2 to 3% on $1 million worth of funding. That's $20,000 to $30,000 a month. Now, if you're trading Forex firms, you can leverage the software called Social Traders Tools. And if you're trading futures, you can leverage the software called Ninja Trader. Now, there's not a video on how to set that up. You can just Google that yourself right after watching this video. I'm not affiliated with any of them. Now, again, aim for a realistic payout. So $2,000, $3,000. But now you're actually requesting $2,000 to $3,000 on 3 to 4 to 5 to 10 accounts at a time, because you actually trade copy on all of them. And this is where the real money is made. Now, if you do it right, you can make a lot of money with prop firms. Like, I'm talking about a lot of money. But that's obviously only if you also have a profitable strategy behind it. So let me break down the exact strategy I use to make 10, 15, 20 to $25,000 a month with prop firms. And now the best thing about this is that it's a super easy 3-step simple strategy. And let me just explain how it works quickly here. So step number 1 is to identify the overall higher time frame direction and bias. And this is what we call the continuation phase. Now, if you look at the left right here, you can clearly see that this is bullish and this is bearish. So an uptrend and a downtrend. And this is very important, so you can actually identify the higher time frame direction and you can follow the wave instead of trying to catch reversals and get a win rate of 20% or 10%. No, this allows you to get a win rate of above 80%. Now, step number 2 is to wait for buy side and sell side liquidity to form. And this is what we call consolidation phase. So if you don't know what buy side and sell side liquidity is, it's essentially liquidity above previous highs and below previous lows. So buy side liquidity and sell side liquidity. Vice versa right here, buy side liquidity above previous highs and sell side liquidity below previous lows. And if you don't know already, liquidity equals stop losses and stop losses equals money. So liquidity also equals money, and liquidity is essentially stop losses from other retail traders. So when you have that in mind, right, there are retail traders that have gotten in sell positions right here, anticipating this move to continue down. Where do they have their stops? Well, they have their stops above previous highs, aka making it buy side liquidity. And now vice versa as well. There's people and retail traders, institutions that are in buy positions right here. And where do they have their stop losses? Well, they have it below previous lows because that's what makes the most amount of sense for them. So that's what we call sell side liquidity, and vice versa. And the bearish trend is the same thing. Buy side liquidity, sell side liquidity. Now, this is very key. And this is where we wait for buy side and sell side to form for us to then take advantage of that and then move into the liquidity phase. Now, that leads us to the third step, which is waiting for a liquidity grab. Okay, so we wait for liquidity grab, grabbing all the either sell side liquidity or buy side liquidity and tapping everyone out before moving in that higher time frame direction. So if we break it down here, what essentially happens? Well, we are in a bullish trend right here, right? High, higher low, higher highs, higher lows. And then now price is looking like it want to break out. So everyone that is first of all in sell positions here, they have their stop losses up here, take profit down here. But there's also people in buy positions because this looks like a clear breakout plus a retracement to this level, and then they get into buy positions, stop loss below previous lows, aka sell side liquidity, and they're anticipating this move. And now because everyone is trading this way, everyone is trading a breakout plus a retracement plus a continuation. Well, if most of traders are trading that way, but most traders are also unprofitable, well, there's something wrong here, right? That is what we take advantage of. We take advantage of everyone else getting stopped out, and then we move. So we don't enter here. We identify that, okay, well, most people are entering here. Most people have their stop losses here. So we wait for that to get liquidated, stop hunted, manipulated. It's the same thing. And then we can take advantage of the move. So again, we don't enter here, but we enter post liquidity grab right here, and then we ride the wave up. And vice versa. In a bearish trend, low, lower high, lower low, lower high, this is respecting this level, and most people will get into short positions right there, stop loss above previous highs, making it buy side liquidity, and they have their take profit down here. Now, this is what we don't do because we don't trade like everyone else, because everyone else or most people are unfortunately unprofitable. So what we do instead is actually wait for everyone to get stop hunted, manipulated, and then we take advantage of the move to continue down. So we essentially take advantage of everyone else being unprofitable, getting stopped out, getting manipulated by the markets, and then we move. And then we make our money, funny enough. That's how this strategy works so good. That's how it's got such a high win rate. So again, you enter your position post liquidity grab, right? So you enter either here, break previous, or a candle closure, have your stop loss below, and then take profit up here. Again, this is not a 1-to-5 RR. You can clearly see this. This is a 1-to-1 or 1-to-1.5 or 1-to-2 RR. But with an 80 to 85% win rate, This is insanely profitable. So if we put the entire strategy together right here, I call it the CCL. So continuation, consolidation, liquidity, and then it starts repeating itself, continuation, consolidation, liquidity. So after the liquidity phase, we actually get the continuation phase again. Now, if we break down these two scenarios right here, and I'll go over to the charts in just a second, but we can essentially see that in a bullish trend, that's also why we need to identify the higher time frame direction, so we can actually take advantage of the trend, because your trend is your friend. And you see right here, high, high, low, higher, high. This is the continuation phase. Then we start to consolidate, aka move sideways like this, generating buy-side liquidity and sell-side liquidity. Now, after the consolidation phase, we get the liquidity phase. We make a liquidity grab, stop out everyone that entered early, right? What comes after the liquidity phase? Continuation again. Look at this. It's absolutely beautiful, and it works so good. Now, on the bearish example right here, you can see a low, lower high, lower low. That is the continuation phase. Then we start to move sideways, generate buy-side, sell-side liquidity. Then after the consolidation phase, we get the liquidity phase. And after the liquidity phase, we get the continuation phase again right here. And this is what we want to take advantage of post liquidity. Now, there's some more stuff to this, so let me go over to TradingView and explain some trades I actually took myself that you could have taken as well and could have made money by doing so. Now, we are on TradingView right now, and I can already see like 5 different examples. Now, this is NQ, which means it's futures, but it also works on all Forex pairs, all CFDs, and all futures pairs. So you can go to NAS 100, that's CFDs, that's Forex, it's the same thing. Now, if you look at this, this is beautiful, because if I zoom in randomly, let's go over step by step, right? Let's actually start, where should we start? Here, let's start here. This is not scripted, this is not whatever. This is clear price action. I'm taking out random examples here. Now, what do we see here? Well, we see the higher time frame is bearish, right? And what happens when we're in a bearish trend? Well, we make liquidity grabs to the upside, and then we can follow the wave down. Now, the first example I showed you on the presentation of the drawings, well, it's obviously theoretical. It's going to look a bit more choppy when it's actually real price action. But nonetheless, you can easily see it right here. We got the continuation, right? Then we have the consolidation right here. Then we have the liquidity phase breaking previous highs up here. This is not a clear liquidity grab, but it is a liquidity grab. We broke previous highs. And then what do we get after the liquidity phase? We get the continuation again. Now, we can go more in depth about this. You can see already here, right? Continuation. Then we basically start consolidating, moving sideways. Then what do we get? We get a liquidity grab to the upside, breaking these highs right here. Then we get a liquidity grab. What happens after liquidity phase? We continue down. Okay, we follow the higher time frame direction. We wait for everyone to get stopped out, and then we enter. Now, you can also see that if everyone I was trading, let's say I was trading like everyone, I would have entered right there, had my stops above this candle high, and then I would have targeted these lows down here. Now, what happens, right? Well, price immediately stops me out, and then it moves in the continuation phase. And this is what we want to take advantage of. We want to take advantage of everyone getting stopped out, and then we can move. So we don't enter here like everyone else. We enter post liquidity grab, and then have a stop above the liquidity phase, and then continue down. Now, you can see this again right here. This is literally the same price action. You can see a liquidity grab here as well, right? We get the continuation phase. Then we get the consolidation phase. And now there's obviously liquidity resting above previous highs and below previous lows. And that equals to liquidity resting right there. So you see a liquidity phase, right? We see a liquidity grab right here. And then what happens after liquidity phase? We get the continuation phase again. It happens over and over again. And you just need to be clear. You need to be fast. And you need to know how this works so you can make a lot of money by doing so. Now, let's go over some more. You can see right here, we made a liquidity grab. Then we continue down. Made a liquidity grab, breaking previous highs, then continue down. What happens here? When do we switch to bullish? Because I want to go over some bullish example as well. You can see right here, liquidity grab to the downside, breaking previous lows. Then we continued bullish. You can also see here, broke these previous lows, then continue bullish. Let me just find a very clear example. Oh, look at this, boys. Now we switch from a bearish trend to a bullish trend, right? We grab liquidity here below these lows. We continued up. And what happens here? This is market open. You have to time it with market opens and volume-based trading as well. Okay, so what happens? Well, we get the continuation. Then pre-market open, right? We get the consolidation phase where we generate buy-side liquidity and sell-side liquidity. So let's actually mark out the sell-side liquidity here. We have these lows right here, and we have these lows right here. What happens? Well, we enter the liquidity phase. So we shoot down, liquidate all of these lows, and everyone that had their stop losses down there that entered, let's say, positions here, stop loss here, or even entered positions here and stop loss down here, everyone got liquidated, stop hunted, and manipulated. And what does price then want to do? We move into the continuation phase again. continuation, consolidation, liquidity, and then continuation again. Do you see this? Continuation, consolidation, liquidity, continuation. It is so beautiful. And now this is where we enter. We enter post liquidity grab, something like this, depending on the entry type, right? Have your stop loss below and then target either these highs or these highs up here. And this is just beautiful price action. I mean, this works so good. This is how you can get such a good and high win rate with. Look at this. It happened here again. Like, look at this, right? We get the continuation. You can also see that, you can also kind of say that this is the continuation phase because it is subjective. Trading is subjective. Okay, you need to look at it with your own eyes. You need to see it yourself and practice it, backtest it, and then you can make a lot of money. Okay, you have to understand how the strategy works yourself. Okay, now you can see the continuation phase right here, consolidation, we're moving sideways, then we get a liquidity phase, then we get the continuation phase again. And this is essentially the strategy you want to be using if you want to hit your first $10,000, $15,000, $25,000 a month with prop firms. Now, if you like the video so far, please leave a like, comment, and subscribe. And before you go, I've got something for you. I've got a full 16-page PDF file going over my entire strategy I just talked about, where you can basically copy the entry types, the setup types, and basically the entire strategy. So if you want access to this for free, leave a like, comment, and subscribe, and join my free Discord. It's in there. Otherwise, hope you like this video, and I'm out.